Robinhood held what I think might be one of the most important finance events over the past decade or so. And this follows an event about a year ago, their Robinhood Gold event, that I think was also extremely impressive. A year ago, they announced the Robinhood Gold credit card. I think that's maybe one of the most innovative credit cards that we've seen ever. I've been using that card for a few months now, and just phenomenal, just little features that differentiate it from other products out there. But they brought a bunch of new products to the market, including advisors and private banking products. So one of the things that's getting a lot of attention in the market is the delivery of money. I don't think that's actually such a big deal, but the whole theme for Robinhood right now is bringing these services that were often just for exclusive higher end clients to the masses. And they're doing that because they have a digital business and digital infrastructure. So many of these big banks, these companies that are trying to make their high end clients happy, they are built in a physical world. So they have physical costs, whether it's buildings, they have staff and overhead they need to pay. So it's very expensive to operate those businesses. But Robinhood is coming at this digitally. They can just digitize basically everything they're doing. So that gives them completely different cost structure and financial incentive. That is what's ultimately so disruptive about Robinhood. It's one of the reasons I'm so excited about the stock. But let me dig into this a little bit more today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at the blog post that Robinhood put out. There is a video that goes along with this. You can find that video on YouTube or also on this blog post, but this gives some good context behind it. First thing that they announced is Robinhood Strategies. And what this really is basically access to somebody who's going to put together an investing strategy for you. So something like an investment advisor would do. But an investment advisor typically is going to charge you a percentage of what your assets are. So if you're investing $100,000 with an investment advisor, they're going to charge something like $1,000 or 1% fee. This is going to cost you $250 per year, no matter how much money. There's actually an escalator, but at most it's going to cost you $250 in fees. So just a completely different cost structure. And they're going to give you a number of different ways to do this. They're using things like artificial intelligence to build out portfolios that would make sense for you, depending on what your investing time horizon is, what your risk profile is, how much do you want to be in stocks or bonds. And you're going to have full transparency into what you actually own. So that fee is going to be 0.25% annual fee. Again, that's going to be lower than basically any investment advisor you're ever going to see out there. Access to a diversified mix of both single stocks and ETFs, an interactive portfolio. So they've got these nice graphics that they have built into the Robinhood app. If you use Robinhood, this is the kind of stuff you see all the time. Portfolio insights, simulated future returns. So they're using Monte Carlo analysis. And then they're going to do things like try to buy and sell in the most tax advantage way possible. And this is going to be possible for both managed individual and retirement accounts. The interesting thing is this is already available on Robinhood. So again, the company is democratizing things that were once only available to more wealthy individuals. Now you can start with these managed accounts with just a few hundred or a few $1,000s in your Robinhood account. So phenomenal new product. And I think this is going to pull even more customers to Robinhood, potentially even more high wealth customers. If you imagine you're investing $10 million, if you're paying somebody $100,000 a year to do that, and you can go to Robinhood and get the same service for $250, that's a pretty compelling reason to move to Robinhood. So I think that could continue the asset flow to Robinhood. The second thing is Robinhood Banking. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This really gets Robinhood more into the bank account business. And they've talked a lot about increasing their wallet share. And this is just a piece of that. So you can get a 4% annual percentage yield on your savings account, access to private banking services such as estate planning, professional tax advice. We'll see what this looks like. I'm really curious to see how they execute this, because this is the kind of thing that could be done really well, but it is nice to talk to an individual if you are in need of those kind of services. Up to $2.5 million in FDIC insurance, and then a world of perks. So you can go to the Monaco Grand Prix and all kinds of other crazy stuff. This is where that getting cash delivered on demand at your doorstep. I don't know how much usage that's going to get. That will be interesting to see. I could see cases as a parent where, can't leave the house. Maybe I do need a little bit of cash for the tooth fairy or something like that, but probably not something I'm going to be using a whole lot. and then accounts for the whole family. So this is, again, another thing. They're expanding the number of products and services that they're offering. So now we're starting from brokerage accounts. Now you've got retirement accounts. Now you can have custodial accounts for kids and spouses and things like that. And then track your net worth. So this is not new information. This is not necessarily new technology or products that other companies don't offer, but you're going to be able to have all of this now on Robinhood. So the whole idea is to bring more of your financial services, more of your banking onto the Robinhood platform. And I got to say, what I have moved there has been really impressive just because it's very, very simple to use. And the bonuses are much better than you get with other accounts. So will be interesting to see if this is successful in attracting not only more assets, which they've done a phenomenal job of over the past year or two, but also more customers. That growth has been a little bit slower. There's also Robinhood Cortex. This is going to be, it's kind of more of an information services. If you're a long-term investor, maybe this isn't the kind of stuff that you're going to use, but it's going to have all kinds of information on options pricing, stock digest. So going to give you information about why a stock is going up or down each day. A trade builder, that's where some of that options information comes in. So this is going to be more for those active traders. But again, Robinhood is trying to attract more of those active traders, more of that wallet share. So this does make sense in their long-term strategy. Now, as an investor, Robinhood shares have actually fallen since this event. And I think the valuation is starting to be pretty compelling. Price to earnings multiple, as I'm recording, is about 29. Forward PE is about 32. So analysts are expecting that earnings to come down just a little bit over the next year, but they do have a $39 billion market cap, and the enterprise value to sales is well over 10. So that's the one thing that's a little bit concerning. They do have a ton of operating leverage, and that's really the fundamental view behind this business is they can do things digitally and get more operating leverage than any of their other banking competitors. So I think Robinhood, as far as a product development standpoint and what they're bringing to market, is absolutely hitting on all cylinders. I absolutely love the way that they're executing the business. The price, still high. And we need to just acknowledge that. Now, I maybe end up, holding my nose and just buying shares anyways over the next couple of months because I think what they're doing with the product is so impressive. But I think it's worth acknowledging that oftentimes you do have to pay up for really good companies. I think Robinhood now falls in that category. But if we do see a pullback in 2025, let's say because the market pulls back, then those assets under management start to come down, especially if cryptocurrency trading starts to drop. We could see revenue even pull back as well. So those would be, to me, buying opportunities long-term. And if there is a drop in the market and a drop in Robinhood shares, I'm going to be looking to dollar cost average because, again, this is a kind of company that's disrupting the traditional financial infrastructure. That's exactly where I want to be as an asymmetric investor. Love these announcements this week. And again, Vlad and the team just hitting on all cylinders. So let me know what you think about this announcement from Robinhood. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.